Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. US equity markets are on rocket mode. Dow crossed 1,000 point 8 times in the current year. The last 1,000 point ka moment took only 19 trading days. S&P 500 has closed on an all-time high 53 times this year. But the question is whether the rally is going to last for a longer period or not. And if you are an invested or if you're an investor in the US equity market, what action you should take now. One of the biggest investors in the US equity market is Warren Buffett, and his company Berkshire Hathaway is sitting close to cash pile worth of $320 billion. Is he seeing something what the market is not seeing? Let us understand that. One of the favorite indicator of Warren Buffett is uh, total market capitalization of a country divided by GDP of that country. If that ratio comes lesser than 84, it means that the market is highly undervalued. And if that ratio comes above 156, it means that market is overvalued. Currently, that ratio for US market is close to 204, which is indicating that market is significantly overvalued. Second indicator is the equity risk premium is getting lower and lower day by day. Generally, they say that if you are an investor in equity market, you will need more premium than investing in the debt product. Now, currently, if we see what is the premium uh, difference between equity, US equity market return and debt product, it is coming to 0.17. It is as low as what happened in 1999 to 2000. After that, dot-com bubble happened. So basically, we can say that there is no incentive for an equity investor to invest in equity market looking at equity risk premium. Now, the third indicator is indicating that whatever rise has happened in the US stock market, it is not a broad based rally. Whenever any rally is not a broad based, it it's sustainable is always a question mark. In S&P 500, in last 1 year, 10 stocks contributed 34% of market capitalization, and another 66% of market capitalization is coming from 590 stocks. That this is indicating that market rally is not on a broader terms, indicating risk in the market. If you see the chart of S&P 500, then 6,200 to 6,500 is going to act as a very strong resistance for S&P 500. A close below 5,800 level on a weekly basis would be a first indication that the trend is going to change. And if that level is broken, then probably we can move towards 5,400 and 5,200 in coming days. There are some mutual funds which give you access to invest in US equity market. If you are an investor who have invested in US equity market, going underweight on US equity market at the current levels can be one of the good ideas. Now let us discuss the outlook on rupee. Last week MSCI inflow worth 2.5 billion came into Indian equity market, because of which rupee moved from 84.47 to 84.25 level. Despite that, regular buying from importers have reversed the entire trend and rupee closed near 84.50. Generally, in the month of December, it has been seen that 70% of the time rupee has become stronger. Now, the big question is whether the rupee is going to give a chance to importer to cover at lower level, or whether the rupee is going to move higher towards 84.70 or 85 kind of levels. In today's presentation, we are going to discuss that. To understand that, let us start with positive points for rupee. On the positive side, dollar index 10-year US yield and Japanese currency all have shown the sign of reversal. Dollar index, which is currently trading near 105.50, is expected to move lower towards 103.50 as market will start anticipating that Fed is going to cut interest rate in its upcoming December meeting. If dollar index become weaker, then ideally it is positive for all emerging market currencies, including rupee. On the negative side, FIIs have been selling in Indian equity market, uh, which is creating a lot of pressure on rupee. Second, GDP data came on the lower side. Entire market was expecting Q2 GDP data to come at 6.5%. Instead of that, it came to 5.6%. Third negative point is Indian banking system is currently in a negative liquidity situation, because of which RBI had to infuse liquidity to the tune of 7,000 crore. If Indian banking system is in a negative liquidity situation at that point of time, RBI will not be able to sell dollars aggressively, because if they sell dollars aggressively, then rupee liquidity gets more withdrawn from the system. So RBI will not be able to sell dollars aggressively. So in a nutshell, negative points are more than the positive points, because of which 84.20 to 84.25 is going to act as a very strong support for rupee. Till that time rupee is not closing below 84.20, we can say that the trend is on the upper side, basically expecting rupee to trade in a narrow range between 84.20 to 84.60 for the coming days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.